Right. Good afternoon, all. We can start today's session. I think last week we could meet only we had one session, right? So today we'll start our second session. I think last time we stopped discussing inflation, right? I was explaining the fantastic three about interest rate and inflation and the exchange rate, right? So I think I discussed about taking some example as well, right? So today we'll start from there where we stop. And I can remember, so I was trying to explain the interest rate situation, right? And I gave example also how I think I took example like Singer, how it had an impact on interest rate, right? In sum up, what happened when the interest rate goes up, actually it goes down, will, wait, give me a minute. Right? For the stock market and any asset investment, it is very essential that you understand the movement of interest rate, right? So let me complete the discussion what we had and example. So I'm trying to give you the interest rate scenario. Uh, Now, when the interest rate come down, mainly the government, whoever in power, so then like for before the election, so they want to lower the interest rate, right? This is what was happening, right? So this was what happening in the past, where the government, so they want to make interest rate low. Then, so interest rate, as I explained last week, interest rate is that the price you pay for the money, right? So when the interest rate come down, the money is cheap, so the people can borrow. So when the people borrow, I said they will invest, they will increase their consumption, the resulting top line growth in the companies, as well as another reason is when the interest rate come down, their financial costs come down. So making profitability increasing from both sides, from the top line as well as expense side also. So that's why I took the example in single and explained to you, right? And so let me explain what happened, what will happen normally when before the election they reduce the interest rate. So then when the election year, so people see like everything is perfect, the interest rate is okay, they can borrow and they can purchase the things they want. Like you can buy a vehicle, you can buy new furniture to your home, you can buy land or house or whatever, right? The people were happy. So then probably they may vote based on that part. Now, what happened when the elects in Sri Lankan scenario, when the interest rate may reduce, example, so before the interest rate, let me see, the exchange rate is 200 rupees per $1, right? For $1. Now, when we increase our consumption, so all of you know, we consume and we buy a lot of import stuff, right? Stuff importing from various countries. So obviously, when the interest rate come down, when we increase our consumption, so import obviously will go up, right? When the import is going up, what happened? There is a demand for dollar, right? So which will result dollar to go up unless we have a strong uh, export. I think all of you know our export are not very much strong. And we are getting dollar income from various functions, mainly export of goods and services and the tourism inflows and the worker remittances. Those are our main three areas, right? So when there's a demand for dollar, so dollar will go up. right? So dollar might be like 200, 250 or something, say 225, right? Like that is going up. So when the dollar start to go up, the authorities, finance ministry, central bank, so right, they are worried. Why? When the exchange rate go up, all our import values go up, including food item, right? So when the import is expensive, you can see our cost of food item and non-food item both are going up, so resulting in inflation, right? So which is not good for the consumer or the voters' perspective. So in order to control the exchange rate going up, so they will increase the interest rate, right? So then like that, all these patterns will be having it. Now probably now exchange rate might be here 200. When this cycle comes, maybe 225. Then again, maybe 230 here. Then again, 250, right? So then 300, maybe 275, then 300. So like every cycle, so exchange rate going up. So resulting the asset value to go up, right? So this is what the situation is normally when the interest rate, first they reduce the interest rate, right? So then the exchange rate going to increase, uh, and again the inflation also going up. So in order to uh, the first reduce interest rate, so then the exchange rate go up, then again the inflation go up. In order to reduce these two, so they increase the interest rate. So this is a tool available for the authorities to control the economy. That's why all those three have a relationship or connectivity that you need to understand. And every time this cycle happen, you can see exchange rate going up and rupees depreciating, resulting our buying power, right? The buying power of consumer is reducing, making consumers are poor. And every cycle this happen, the asset value go up. When there is exchange rate going up, the asset value also go up, right? Resulting, you can make gains, including stock, right? Before the cycle, say somewhere here, say your the stock is say 10 rupee. So with the interest rate come down, it will be like 80. So then when the interest rate go up, it will reduce the price. Might be not going back to 10, it will be stopped at around say 40. Then again next cycle stock may go up to 22. Then again come to 16, right? Then again go up to 20, 30, like that, the stock prices, right? Now that's why I said, so in stock market also you have similar pattern, but the momentum is the point to point you see the market has gone up, but you can see these cycles as the interest rate going up and coming down. So you need to understand this pattern. So pattern is very important you to make gain, but uh, based on the interest rate movement, market fluctuate, right? But the important thing is it keep the value in long term. Now with this IMF scenarios, now all of you know we are on the IMF agreement, right? So now the scenario has changed. Like uh, when the government want to reduce this interest rate, right? It actually happened not through the market process. So artificially they are doing that. So how they do artificially? So we call money printing, right? The money printing is not that actually they print money. They create money in the system, right? They create money in the system. So how do you do? Like treasury bill things that a central bank can buy, right? When there's a treasury bill auction, instead of real investors buying, central bank can buy, right? So they create money from the system and give the advances to the government, right? So that money cash issues not backed by the economic activity. So what happened when the central bank doing that? There is more money in the system. The liquidity will go up. When there's more liquidity in the market, the interest rate coming down, right? If something is more, you can see, prices are coming down. So that's what the interest rate come down, right? So that but now that money printing or money creation part is now little difficult with this. In fact, they can't do with the IMF agreement, right? So money printing is the one, the action which very much harmful to citizen. That's the one reduce our real value of our investment, right? And money printing is now no more there, and uh, because of that, government can't create extra excess money. Another thing is, as per the IMF agreement, CBSL and Treasury, the government Treasury, so they have agreed to inflation to 5%. So that's the maximum government and central bank has agreed. But right now they couldn't make that 5%. So somewhere around we were like, right, you can see we were like somewhere the minus, right? Somewhere like very much towards the minus side. So we call the minus side, we call deflation. So which is also not good compared to inflation. The deflation is money, the market prices come down, right? And we were having this one, and in fact, now in August, barely went up to above one, right? Somewhere around one. So we are back to inflation after I think nearly 2 years. After 2 years, we are back to inflation. So target inflation is 5%, right? Target inflation is 5%, and right now they achieve only around 1% kind of a thing. Right? That's a room. And when the inflation is 8, and right now the treasury bill, the repo rate and all somewhere around the policy rate is something 7.5, right? So when you have a interest rate, uh, uh, no, there's a question 5% per quarter. Or no, it's the annual one, annual target, right? Annual target, and always you have to keep interest rate above the inflation. So that's why the danger of inflation going up. The inflation is the key. When the inflation going up, interest rate need to increase. That's why when the our interest rate, our inflation went up to 70%. That's why they increase interest rate, right? So they increase interest rate, that's why. But you can see inflation went up to 70, but interest rate went up to 35. So interest is 35, inflation is 70. So your real money, your real wealth come down by minus 35. So that's what happened in the past during this economic cycle. Ideally, interest rate should have been more than the um, ideally, interest rate should have been more than the uh, inflation, but government didn't do, so they increase up to 30. That's why I think some investors they really happy that they say, interest rate now 35%, we should capitalize. The mistake you did, what happened when the inflation is 30, 70, you are getting only 35, making 35% minus, right? In this example is it's like this. Now, if you have a like 100,000 in that scenario, if you see interest rate is 35%, right? So if you have 100,000, now you want to buy a mobile phone. Now mobile phone is 100,000, right? So mobile phone is 100,000. Instead of buying the mobile phone, you defer the consumption. You defer the consumption. You think the interest rate is attractive, I must do. So after 1 year, with the 35% interest rate, so I can make profit, right? So hoping that the good phone value will remain. What happens? So after 1 year, you will get 135 with the interest rate. But whereas since inflation was 70, the mobile price has gone up to 170. Now you can't buy. So now you have 135,000. Mobile is 170. So earlier both were together. Now you can't do. So this is what the inflation. Your buying power has come down. That's what exactly happened here. That's what exactly happened. Interest rate 35, but inflation 70, right? But always you have to remember interest rate should be more than the inflation, right? Then only you will get the real. Now, example, right now, the overnight repo and then FD rate somewhere around 7.5 or say 8, you have 8. Now, inflation is actually 1, right? So then you have a real interest rate of 7. You have to look for real interest rate of 7. So 7 is not bad, right? And another thing, now when now if the interest rate again 7 scenario, if the inflation hit 5%, probably they may keep it, right? Because still you have a 3% real. Sometimes they may increase like only maybe 2, maybe interest rate 5, inflation 5. So you will get real rate 5, right? So that's how they adjust the interest rate. So you need to look for uh, inflation. When if the inflation is under 5, probably they may not touch, right? Interest rate, they may keep it. So we have to eye for the exchange rate when you are in inflation, because when the exchange rate go up, right now there is a small upward movement in the exchange rate. If the exchange rate go up, in order to tackle the food prices, import items, they might there can be some inflation, right? So in order to tackle the inflation, they might increase the interest rate. So that's the scenario you need to understand, right? So inflation part we have done. So this is the, you can see if you go to the central bank side, so I have given the link, they monthly submit, right? So we have inflation measurement 2 area. So you may do more in extensively when you discuss economic subject, but here I will only give you small update only, right? We have two measurement. One is the CCPI. So CCPI is, which is little higher. CCPI is Colombo Consumer Price Index. They consider the Colombo prices, which is fairly high compared to rural area. The other one is the National Consumer Price Index. The national means around the country, right? If you see they give like this is their press release last August 29. Again, September, end of September, they give you. You can see following 11 consecutive month of deflation. Deflation is not good, right? Which is which is not good for the growth. So deflation is the bigger problem for Europeans. Mainly Europe countries, they have this prolonged deflation. Headline inflation as measured by the year on year changes Colombo consumer price returned to the positive territory in August, recording 1.2. So they 1.2, right? So this is their forecast. Probably they expect like uh, something. This is the 5% is the target, right? 5% is the target. You can see inflation target 5% was set under the monetary policy framework agreement between central bank and the Ministry of Finance signed on October. Those are a landmark agreement. Earlier, we were not having those things. That's why our country's financial discipline was very bad. So bad financial discipline has created this economic problem. But now, so those are very difficult because now everything is come under this monetary policy framework, right? So we are actually heading for the good direction, provided that the government will honor this agreement. Because in the past, this is our 17th time with IMF. We have gone 16 times previously. We have never completed, right? The full period we have never completed. So that's the problem we have, right? Now, so this is their best scenario, probably minus worst scenario, minus deflation, inflation, or probably 10% or 15%. So that's their, you can see the red dotted, it is in, actually it has started somewhere here, now it's going up, right? So now I think mainly this went up. The electricity prices they increased now last month, right? Again, I think they have suggested 6% or something tariff increase, which might have an impact, right? So this is the target. If you see that this target is increasing, probably one thing they might increase the target or might increase the interest rate, right? So those are the possibilities you have to look for every month, right? You can see mainly the positive came from August. The education has gone up, right? Uh, yeah, and the measuring is good. So those are the things they measure, right? Even health, no change. Even alcoholic items has gone up like that, right? So this is we are in August. You can see year to year 1.2 positive. Okay. And that's the question why is the deflation is bad for the growth? Because when you have a deflation is the growth is very bad because when there is a money there's no growth actually. That's why Europeans they have 1% or 2% growth, right? When your prices is going up, your growth is actually you may have growth like say in say nominal one is 5% growth. Say nominal is 5%, right? So when you have a inflation of 2, your real we call real growth is 3, right? So when you this is a real growth. So when you have a 5% growth, again the nominal growth. So difference between nominal means the with the price increase, real means without price increase. So that the inflation adjusting, right? So 5%, if you have a deflation of -1, so then you have a how much? Uh, so the growth is uh, coming down, right? Growth is coming down. So growth is uh, because of the inflation is adjusted, right? So inflation 5 plus 2 plus 1, 6. But the money uh, this has negative impact because that will bring down your uh, growth, bring down your growth. Mainly the inflation at like your real growth. If you have a real growth, say 3%, 3%, and inflation it at right. If the inflation is 1, you have 4. If you have a minus thing, it will come down. So your real nominal one will come down, right? So nominal one will come down with the uh, uh, deflation, right? So that's why we say deflation. Deflation is bad. Any more questions?
So, excuse me, sir, what is the best rate for the which is not affected the economy? So, if we
Uh, something like in the past, you can see we used to have very higher less than single digit. We used to have less than single should be under maybe single digit, right? Maybe we all along we had 8%, 7% like that in the past. If you go down in the past, right? You can see gain minus
If we can, sir, if we can keep like zero. So if it
Sorry?
is, if we can keep like zero level, like no deflation, no inflation, so what will be effect to the economy?
No, we need to have some inflation also. Then due to inflation, there's a natural growth also. There's a because the price level anyway go up. No, there's a when you have a inflation, that's what when you have the price level is anyway going up. When you have a inflation, the price level go up. This is the beginning price 100. If the inflation is 5%, in the year end value is 105. So which is like then you can see the economic growth because when your price level also going up, right? So then you can see the growth also, nominal growth also coming when the prices are going up. You can see the growth. So because growth will be assisted by the prices going up because your GDP is going up in real terms. That means no inflation. When there's a inflation, the GDP also go up by real plus inflation, right? You need to have kind of a small so I think right now, so they have uh, uh, they have just the government has agreed to have 5% is the best shoot for Sri Lanka. But we had in all the period before this crisis, we had single digit for more than 10-15 years, less than 10%. Right? That time the government told that's the amount. And the government also like to have inflation because naturally you will have a growth, right? We call economic uh, GDP. So there is no right or wrong answer, right? So that country need to. So nominal GDP growth show the total economic growth without accounting for inflation, while real economic growth adjust for the inflation, show the actual volume of numbers. And the real nominal is there without adjusting for inflation. That's what I.
So when it comes to the disinflation environment, the individuals have more buying power, right?
Sorry?
When it comes to a disinflation environment, the individuals have more buying power, right?
Yeah.
That the prices of the goods tend to falling down.
Correct. But our case, what happened? So you can see our case. So it has gone to 70%, right? And right now we see some deflation here. So this is the bottom. So when the inflation went up, so government central bank took some hard decision. So in order to bring down, so when you bring down, when you take the decision, it's not like driving a vehicle. No, you can't have a hard stop at zero. So that's why it went fast beyond one, beyond zero. So now they took the counter decisions to bring them up. So they are targeting somewhere here, right? But you can see we lost this much, right? Say we lost, say they are targeting 5%, but you can say minus one, but it has gone up 70%. So our buying power we have lost by 70%. Then no point of regaining, no value in regaining only 1%, right? It ideally, you can see inflation is deflation or inflation is the rate, the increase rate at which the prices are going up. It doesn't mean that prices are coming down. The deflate minus means the prices are actually reducing. Prices are reducing. The inflation, the deflation is prices are reducing. Inflation is prices are increasing. It doesn't mean that prices are coming down. The rate in which prices are going up is reducing. Right? The inflation 5% means prices are going up by 5%. But having increased by 70%, it has never come to it will never recover. it has never recovered, right? So ideally it should have been minus 70. So then only we were there where we were, right? Where we were. So I still that's why we can't never regain. You can, yes, I agree. Then when there is a deflation, you can see the good for consumption, because prices now what happened. There are some argument when the deflation, it actually doesn't mean that prices are low. Now prices are actually not growing. That's the deflation. Prices are not growing, right? Uh, it doesn't mean that prices have come down, slightly come down, but it, say example, it has gone up to 70. Now it remains 70 or coming down to 68 or something. It from 0 to 70 it has gone. When there is a deflation, the danger is consumer defer, right? So consumer defer the consumption because they think, okay, this month -1. So what I wait, if I wait next month, probably it will be another 2%, right? So if I wait this month 68, next month maybe 66, right? You expect price to come down. So what the normal consumer do? They defer the consumption, right? They defer the consumption. That's why we say it's not good for the economic growth, because no economic activities will happen. Consumer do wait and see. So when there is a inflation, today 66, next month 68, right? The going up. When prices are going up, okay. Then the consumers say, okay, prices are going up. No point of differing. I should do now. So they advance the consumption, which is more growth oriented. So those are like some theoretical aspect. The real growth, uh, real growth, real is the more accurate reflection of the output of economy than nominal, right? So now you see central bank, normally they show you have to look for real growth, because when there is a inflation, exchange economic growth adjusted by the price differences, right? When the nominal economic growth, there is a real growth plus price growth. Both are there. To show their real growth scenario. The real GDP growth was estimated around 5%. The significant rebound after 2.3 positive growth. So this is actually a real growth, right? The 5% is the real growth. So when you real one, when you with the nominal is 6.2, right? When you add 6.2. You can see here. GDP 5, here the minus. Real. So they discuss about real. So real growth is 5%. That means the nominal is 5 plus inflation. So 5 plus when you have a minus, your nominal one come down. Nominal one come down, right? When the real is, we have to look for real because eliminating the price, right? So when you have a, okay, so your nominal one actually go up, but thing is the economic activity is not sounding because consumer is differing the consumption. When you have a deflation, as we calculated, the nominal growth is going up, but you can see the negative mindset of the consumer where they expect price to come down. Price to come down and they differ. That's why we call even deflation also bad, high inflation also bad. We should have a ideal inflation now, right? Around 2 to 3, like you were saying, they also have less than 1. But right now with this tariff thing, inflation is going up. But the deflation due to deflation, the nominal growth will go up. Nominal growth go up, but that's statistically, right? Statistically, but long term, you can have short term, right? You can see earlier we computed here, so we the real one is going up, right? Nominal one is going up, but when you have a deflation for so long, which is not healthy, right? Naturally, then the growth will come down. Growth momentum is not there because growth minus. So you need to understand those area, and so then the interest rate, as we discussed, interest rate they change based on the inflation right now, right? So I explained that. So based when the inflation going up, they have increased the interest rate, right? And capital market and the interest rate has a negative relationship. That's why I explained the scenario. Now, right now we have lower interest rate, so higher capital market activities. So in line with when the interest rate come down, when primary rate also coming down. The primary rate means the rate in which bank are lending to their prime customers. So primary rate are much lower than the rate they normally offer for normal customers, right? You can see the rate are coming down. So in line with that, all the deposit rate also coming down. And so all of you know, so we went on restructuring because we couldn't make the loan, right? We couldn't make the loan. Now that restructuring, what happened? Debt restructuring, like in the countries, we can classify like in the globally, the countries are like, so you have developed countries, you have uh, middle income. Middle income we call upper. Then we have middle income lower. Then we have poor. So all the countries come under this category. So we were in this. That's why we call developing country, and we were a poor country. So when you are a poor country, this stratification they cover based on per capita income, right? Per capita income, you can see that in their so this is half yearly chart. you can see the real growth, right? Real growth is without inflation. You can see we have gone into very high real growth, 8.7, 8.6. So that's the rate we should aim for. Otherwise, now this year they say around 3 to 4 something, the citizen won't feel it, right? Yeah, this is the classification. You can see and somewhere we are here, right? Right now we are 4,500 per capita GDP. So the GDP divided by number of people. So based on that only this classification comes, right? So we were a poor country. When you are a poor country, you have access to lower funding, lower interest funding, low interest funding from IMF, World Bank for your growth, or sometimes no interest, right? Like you get donation kind of a thing, right? Because you are a poor country. And now we were a poor country, so we had access to low interest rate funding. But suddenly we became the middle income country, right? Lower middle. So when you are a lower middle country, those concessionary loans are not available for you now. The World Bank, IMF, then the Asian Development Bank, so those guys are saying, sorry, now you are not a poor country, so you are a middle income country. Now those concessionary loan not available now. So then the government, whoever in power in that time, maybe 2005 or something, we 2015 or something, we went to this, right? And before that, 2005, I think. Yeah. Then now you need foreign loan for the growth, right? You need debt to the growth, but now this concessionary loan not available. So because of that, the government issued the sovereign bond. They went for a commercial borrowing because this the multilateral borrowing not available because those are for the poor countries. At concessionary loan, they give higher rate because IMF, World Bank not they have developed America, so they have to develop poor countries. Now they are more focusing on African countries, and we went for a commercial borrowing. So that's why government because they were not have access, they don't have access to the low funding, low rate funding. So they issue sovereign bond. We call international sovereign bond. So government bond, the government has sold in Singapore and London market to borrow, commercial borrowing, right? Commercial borrowing. So we borrowed, successful government keep on borrowing, and we use those funds for our growth. We were doing it nicely, but due to COVID and the subsequent, mainly COVID, this cycle. So we borrow and repay, borrow and repay. The cycle was disturbed because with the COVID, tourists didn't come, the foreign workers, some of them came back to country, the remittances came down. This cycle was disturbed. Now we don't have enough dollars to pay. That's why we did restructuring, right? That's why we did restructuring because we couldn't pay. Then the restructuring is like example, if you borrow 100,000 USD, right? And say for the at 6% for 30 years. So that's the original borrowing. So restructuring you can do in 3 ways. First way is you ask them to reduce the interest rate. Okay, now we say we can't pay 6, reduce it. Okay, then the lender may give you pay, okay, you pay 3%. So then your installment come down. The scenario, another scenario is we say now 30 years is too low for us. Can you give us 50 years? Okay, then they agree, then your installment will come down. Okay. So another scenario is you ask, sorry, now even through that we borrow 100,000. Now actually we can't do that. Can you give us some concession? So then lender might agree, okay, you you borrow 100,000, that's okay. The capital is 100,000, but you repay only 80,000. The principal amount they reduce. So those are the things. So we have all done those, right? And now this year we only pay interest. This year we only pay interest, and 28 we start paying both interest and the capital. So that's right. And we have done all three scenarios for different lenders. And by now we are paying unilateral ones. We are paying the IMF, World Bank, the Indian loan, Bangladesh loan, everything we are settling right now. But the commercial borrowing, we will settle the capital from 28. So 28 we need dollars to repay. Or we have to enhance the government revenue by taxing. Like that's why they increase higher taxes for vehicle. So they get good revenue and they increase the government financial, to which will help them to increase country's credit rating, right? You need to have a good rating. We were like the default category, but right now I think we got some C something. So we had to enhance our credit rating. So then we can go again bond issue. Probably you have to do, you have to, there's a question, can we expect rupee to depreciate? No, that is depend on where now government need to borrow again. So we are not borrowing now. We are borrowing only locally. We are not, government is not borrowing overseas. So they have to start borrowing foreign loan. So right now they can't do because they have to increase. They have to increase rating. Probably they may, end of next year, they may borrow. So if they can borrow, so then they are back to normal cycle. So then no issue. So you borrow in 26 and 6 or 7 me, then you borrow the amount you have to pay in 28. So if you have done, if you have secured that funding, then there won't be any issue. No any economic issue or the exchange rate pressure, but there can be small pressure on the exchange rate, some interest, but not. But if they couldn't borrow, then we have a problem because you need to pay loan, right? So that's the thing you have to look for. You can see in this one, you can see our reserve is, so we had healthy. This is the economic crisis, right? Where we announce our bankruptcy. Okay, because when reserve low, we can't pay the loan, and then it was increasing. But right now you can see, right? Again, reserves are slightly coming down. So this we had to increase by 27. So right now coming down, but you have to. The only way is right. Only visible way is borrowing, because suddenly you can't have a export increase. No, export you can't increase suddenly. It's a long-term process, increasing your competition and right. But it will take some time. So this is the future scenario. So this right now you need to keep monitoring this. If it is further coming down, then they might it's a problem, right? And you can see foreign direct investment also not much of a thing. The worker remittances is the only good thing, right? So it was low, it went up, and again came down lowest in the 22. That's where the crisis came. But right now, say half up to May 3.1. So probably they may in more than this, right? So worker remittances should go up. The tourism also we need to see tourism, say, right? So this is the issue we had with the COVID, right? You can see now if there's any external event happen, reducing Sri Lankan foreign exchange, we'll have a problem, right? You can see the problem where with the COVID, that tourist earning hit, right? So right now it's going up. So this is the one you can see. So this is what the inflation. You can see 2018 that when the interest rate low in 20s also. This is a trade balance means difference between export and import. You can see we never last say 24 years it is minus. So always our import are higher than export. Right? So then, so no way us we getting positive cash through export import. That's why the this one is critical. So tourism going up is good. Worker remittances going up is good for our overall. So you can see current account balance, we are so far okay. We have positive. Then after after crisis, now 3 years is positive. Current account means you adjust uh, uh, in trade balances after adjusting tourist and worker remittances, right? So overall balance of payment also came positive after this crisis. So that also good sign, right? That's also a good sign. So now the problem is here right now. So this one we have to monitor now. Government, so they keep allowing vehicle import also because they don't have a choice because they need tax income. Every dollar go up, so they are earning $1.7 income tax. $1 go out, their tax is $1.7. We are paying 2.7. Right? So that's the otherwise they would have stopped it. So they are not stopping because they need money, tax. Because you need to improve your government financial, which will help you to enhance your credit rating. All are connected. Right? All are connected. You can see that damage happened. The exchange rate went up. So we have to wait and see. Right now, things are now okay. Let's see. So you need to keep monitoring. So your investment will depend on the reserve. So this one you can see, right? Every 3 months they do March, right? And then you can be statistic. Better you check, right? This fact. So they give you monthly indicators, monthly bulletin, those things, right? Better you follow those areas. Okay. So that's why the credit ratings or credit restructuring, we had many uh, cycles, the ISV holders, the discussions we had. And this is what I am saying, right? When you default, we are here. So no one will lend you. So we need to at least come to this triple C. Is I think that's what we should target. Right now, I think we are like double C or something. We should go up. Ideally, B1 is good. Then only you can borrow again, right? But when you are in this triple B minus and below, you have to pay higher premium because you are risk country. Premium is high. When you are above here, when you go up, the premium interest rate is coming, right? So those things you need to very mindful. That will have an impact to your share investment or any investment. Those will have an impact, right? That you need to be mindful.
So one question.
Yeah.
So as we have a lot of tax money from the vehicle importation, so by using that money, can we buy dollars from the local market, and how long
No,
you could do that?
they are buying.
Uh-uh.
So that's
So,
why they collect
uh-uh.
the
How
government.
much usually, how much they can buy, say about, let's say 250, 500 million,
Yeah,
like that?
250 million or something monthly they borrow.
Uh-uh. So that dollars are with whom, sir? With who that? From the local market, where the
Yeah,
dollars?
with central bank.
Uh,
There are some statistics on that. Net purchases of foreign exchange by central bank, a country goes for the raise. That will when the central bank is buying from the local market has helped the country goes official reserve reaching 6 billion. Net purchases August you can see the net purchases. August only $143 million. So the when the so highest was here, right? You can see there's no any pattern. So 112, then drop, increase like that. So when the dollar comes to the market, the central bank is they give rupee and buy dollars, right? So like we call the open market operation, like when the worker remittances come, mainly worker remittances. So when there is a dollars in the market, the central bank give rupees, right, and buy the dollars. Not the government. Actually, government should do, but they are not doing. The government is not active on that. They keep uh, building their money position because their finances were not good. They were on no draft and loan and all. So the government is actually now more positive, more richer. Government is more richer now, but they are not utilizing those funds. So they just reducing their overdraft and loans and keep those huge tax money with them. Ideally, they should do public investment, well, capital investment like the road development, highway development, infrastructure development, like that. Those are some productive things. If you are giving those money like Aswasuma and all, then no economic benefit, not much, right? So the government is not doing that, so they keep accumulating the rupee taxes. And central bank, they give market rupee and purchase dollar and enhance their reserve. So they keep doing that. And when they are doing that, more rupee supply come to the market. So which then interest rate can come down because you have more rupee, right? And for that they absorb using their, so there's excess supply in rupee because you exchange, you give rupee and buy dollars, then more rupee in the market. So those things they subsequently absorb. Otherwise the interest rate might come down, might further reduce. Right, so those are some we call open market thing. You can check from this report. the open market operation. Open market operation, this report, you can, if you go through, you can see, right? So about liquidity framework, everything they mention.
So by doing that,
Well,
we cannot have a significant change in the reserves, no, unless you buy abroad.
Sorry?
No, sir, by buying from the local market, we cannot have a significant change in the reserves, no, unless we
Yeah.
buy from the abroad.
That's the problem. Yes, you are correct. So, but you can see the you have to. That's why I spend some time you to give that knowledge. Good that you pick it up. So there's so our fortune based on that.
does the central bank buy at the rate the rate that it declares for the day?
Sorry, that's the central bank.
Buy the dollars at the same rate that they
Yes,
declare?
yes, same rate. Yeah, correct. You can see though this is the problem. Yeah, now only now they if they now in the vehicle import, I think around $600 million or something went out, right? 600 million or 500 million, even though LC opened 1.2, around 600 million has gone up. So with that 600 million, they have earned nearly more than billion tax revenue. So that's but government happy about that. But if this that if the 600, 500 was not there, then this would have gone up. This would have gone up. I can't see any drafts unless our tourism worker evidences. You can't have sudden accelerated increase now within short period of time. Borrowing is the solution, right? This is because this is our the organic growth from these are organic growth, no borrowing. You can see with borrowing, once it has reached to 10 billion. So with borrowing, right? So when you have when the central bank have a strong reserve, uh, then the exchange rate might fix it because then people won't take uh, positions expecting that currency to depreciate because central bank is have a strong reserve. And that's the thing. That's why I said government they want to increase the government revenue and then go for increase the rating and go for borrowing. So that's the plan. So you have to look for rating when the rating revision come. So that is very critical. Now, if we have to see next month how the reserve position, the reserves are in the decrease, and you can see from here onward, anyways, there's a decrease in right. This is the peak, maybe October or last year. Yeah. Then there is a question. Last week drop in the from market, can it be attributed to process of self correction? Yeah. Maybe market sometime take some breath. So you disturb the momentum and then you reset yourself and come back. Yeah. And so you too, that's why I spent some time. It's better that is when you are in investing journey, you have to have alert on this area, right? So I think mainly this interest, inflation, everything, you should have a good understanding because don't wait things come down. When the market is coming down, no point of you are also reducing your position, something like that. You have to predict market, whether market will go up from this point to next point, or market will come down. So you need to predict. You are predict for that. You to predict, you need some knowledge. That's why I explain these areas, right? So this area you need to keep monitoring. And you can get more information on foreign site like Al Jazeera, Bloomberg, CNBC, right? So if you go to Bloomberg, you can see a lot of information. So you can see global because global one's also affecting very much. Can you remember when the Trump imposed tariff? So it has an impact to us, right? All those things you need to have market, the economics, all those things. So have a politics drive investment dividing Southeast Asia top market. A lot of things you need to be checked, right? This one you can have a look and see just to get updated, right? In foreign one. In local, you have to check this news site and keep you updated, right? Keep you updated. Like Economy Next, this will give like Sri Lanka sell extra bonds like that. So there are time to time they give you you can search and see. So under this market, you can see foreign investors buy Sri Lankan rupee. That also good. Sri Lankan bank cut treasury bill holding as private credit pick up. So then the credit is going up right now. So they have banks, they have reduced the government investment in government securities, and those money they have taken for the credit growth. Right, lot of information is there. You can. I was searching there that government central bank US dollar purchasing, some article was there. Right, so then about daily FT, Lanka business chart. So this chart.lk also giving you some good chart. Right, foreigners continue to increase their investment in local. So this is also one area where we can get foreign exchange when the foreigners are buying local one. So they are actually buying local government because we are not issuing foreign debt still, because under after restructuring we have not done. So that's what we are planning to do. So this is so they have reduced it here. Now they are increasing. Mainly our rates are higher. That's why they come back. Okay. Because now remember US, so the US treasury rate continue to go up, and now I think investors rate has said it has matured. Probably the US Federal Reserve is US central bank, we call Federal Reserve. So they are going to come down. I think Trump is blaming them to reduce it, but there's no political interface. But probably Federal Reserve may reduce interest rate this time. So then when investors see their own countries interest rate are coming down, so they move out to higher interest rate countries. In terms of US dollars, interest rate, our 8% rate are much beneficial. You can see, I think I explained last time. You can see US US rate is around 4.26, right? So our one is double. So obviously they come and invest. Right, you have to keep this one, you need to keep update yourself. So these are local, foreign one, locals one, right? So pre-market update, sometimes the our time zone when we woke up, the New Zealand, Australian, Singapore market already open. So then sometimes there's a pattern. If there's up in those market, so that has a momentum. You can check on that. And you can get market updates on these areas. The investing.com is not, I think, now not working for Sri Lanka. The Trading View and Simply Wall Street, last week I mentioned. So you can in the A-Trade also it link to your A-Trade one. So this one you can search any like any stock in Sri Lanka, and you can lot of information you can see, right? You can see the share prices and in their financials, in their financial overall chart, financials, discussions, right? The technical analysis you will go, I think next semester. I think this time, right? You are doing in this time, yeah. So, right, you can see technically buy. So those things you can check from here. So this is what I want to you to update. This is our GDP. This is our gross national production. So this is very essential. You can see this is our economic crisis. So when your economy have a negative growth, that has a direct impact to the stock market. Not only stock market, everything, all the investments, right? Yeah, and so that's why now we are coming back. That's why market is going up. You have a loss period. You have a like 22, this period you can see minus. So you have a loss opportunity, right? When you are recovery means you need to catch up this area. When you are recovering here, you have to catch up this loss. You need to regain. That's why market is, even some people think market is last year went up. Again, this year now it has gone up more than 20%, right? So they think that is that excessive? No, you have to catch up. You have to catch up. But still, now you can see we are positive, but probably so damage is so much. In the next year only we will catch up our 2018 situation. So the 26, if we go on this rate, we will come to 2018 where we were. So that much is bad is. Still even growth is there. Actually no growth. We are catching up. So the loss, we are regaining the loss growth. So next year, and at this rate, we will be reached to where we were in 28. So then only real growth will start. You have to so many years to catch up. So we need what? We need faster growth. We need faster growth. So that's the government duty. We need faster growth to go there, to catch up. Right? Now, I think catch up will finish next year. So then we need to have faster growth because it's, next year we are at the same point where we were in 2018. You can see after that 7 years behind. So we as a country 7 years behind. So when we were 7 years behind, other countries has gone. So you have to do a lot of fast tracking. You need around 8 to 10% growth to fast track. So that's the government duty. But anyway, now this time they say around 3% to 4%, which is very low. We need growth. So market is reflecting to that growth. The market is expecting that growth, right? That's why prices are going up. Because share prices always reflect the future. You can see mainly our economy mainly go up by industry 9.7, right? And taxes also has gone up. So our GDP, actually we are like a service country. So manufacturing is very weak. You can see industry is only 28%. Agriculture is 6%. The services. So that's what our core competencies are with the service. We should increase services. That's where the growth is for us, right? The financial services, bank, the hotels, transportation, those are the main contributors. Right? Any questions so far? Economic side is okay over now. So that I thought to give you some foundation which will help you to understand where we were and where we can be heading. So this will have a direct impact to your investment, not only stock investment, all the other investment. Any questions so far? Hope you understood the economic broadly.
Sir.
Yeah.
Yeah, just to understand, sir, because this John Keel's automobile industry, when there was some debate and some the problem with regard to this BYD, some capacity issue, with that the John Keel's share price day by day is actually coming down. Do you, because it's a conglomerate company, right? What is your view on that? Because of only that particular company, the share price, because of that particular entity issue is the dragging this share price to drop, or any other reasons on this? Because actually they have invest billions of money for a hotel project with casino. Because since the country like Sri Lanka is a very organic growth on the tourism, right? But after this incident, in my view, actually the share price was coming down. Do you have any other reason for that to the
No,
share price dragging?
yeah, for that, actually so they have given good, Jonke is actually giving you good thing. You can go to their quarterly account. Right now is 22. But I think some foreigners they bought recently, right? So some fund existed and the foreigners they saw some value and recently they bought some, they
Yeah.
increased their holding also, right?
So there was a crossing also happened, sir. JK.
Yeah, JKH big crossing happened and that fund is AIA, right? The AIA, one of the world largest insurance headquarters in, I think, Canada. So they have increased. That's their main shareholder. So they have increased their holding. So you can see. So better you go through their report because they are giving this quarterly accounts is available, and you can see their top one of the most diversified and company big share. This one. HVIC Asia Fund, I think some guy sold some investment, I can't remember who sold, and it was in the media and they have brought it. The HVIC Asia Fund means that AIA, right? Insurance, they have increased. So I think so they may have some computers and stuff and all. But so this one is more. So you have to read this one because the Tom case is a very largest conglomerate. You can see their sectors are from transport, consumer, retail, leisure, and property, financial, this area. So when you analyze and understand these areas, okay, and you can link that knowledge to investment in other shares also, because in consumer food you can see many companies are there, and you can see Cargill is there, then the Jonki subsidiary Ceylon Cold Store CCS is there, right? Many companies. So when the consumer food area is going up means basically FMCG areas are going up, so which is good sign in the growth. Now they give you you can see the consumer actual percentage came down in terms of EBITDA, but the main growth came in excluding City of Drive, the hotel sector boom. You can see City of Dreams is that their main that the new hotel, but other than that, other group, Cinnamon Group, you can see better recovery, and they give you sector-wise analysis: transportation, consumer food, retail, right? You go through, right? And consumer, leisure property, the city of dream. So entire thing they mentioned. The city of dream, actually they are targeting mainly the Indian, right? I think I saw this week also some Indian actor came and I think the opening Shahrukh was to come and Hrithik Roshan came. And sorry, last week also I saw some Indian actor came and they are promoting aggressively in casinos. So it is a new company, takes some time to grow up, but you can see they have explained nicely. And then about so this write-up is very good. You can get overall understanding of the Sri Lankan market because uh, uh, because uh, they are you can see the BYD also during the year under year the JK the quarter under review marked the milestone for the group with the commencement of the revenue and profit recognition of the last quarter, March to June quarter only the first time they recognize. It is NEB business, new energy vehicle, right? Business, JK effective for safety, JK recognized subsidiary of group. But there's a subsidiary, they are not fully owned. If they are any negative, the loss will be shared with like CG Auto. That is the Nepal billionaire. So they don't have full control. The total order received have exceeded expectation with JKG recording encouraging order book. During the quarter under review, material number of vehicles were handed over to customers while so JKH Shark also I think they say Shark JKH will continue to optimize supermarket network and other business location across the country to create necessary. So they are not giving like how many numbers. So the momentum is there. Those are all growth sector, BYD, and I think I saw this week they have announced BYD C Line 5 also, right? Right now 6. And so a lot of potential is there. And with the new hotel, the cinema life also. So momentum is there, they are just promoting. The question you asked uh, about this custom duty one, that it's like now I think the court there's a court proceeding. Court proceeding. I think as per the available info, the custom is investigating. Custom is investigating. So decision can go either way. But right now I think they got the vehicle release based on the bank bond, right? Bank guarantee, the custom has reduced, custom has released. So that they have kept the bond for the tax differences. So which is that's the positive, that's the view we had to see as shareholders. We had to see that's the position, that's the risk we take in decision, whether that decision go against the company or whether decision go in favor of company. If it is go in favor of company, it's a good for the company. If it is go against the company, is have a financial drawback. Financial drawback because big amount they need to pay. Probably they have given bank guarantee means so they somehow they have the money. The loss will be shared between their ownership and the Nepal ownership. For me, it's very difficult to say. That's the this recent stock investment can go either way because after the custom report, the court will decide. I think when I checked I saw in newspaper some time back, similar issue was there when Mitsubishi import this PHEV, the Outlander. So at that time they had such similar issue. Similar issue. Finally, I think the court that time court decided PHEV is a petrol vehicle or something. Then the tax has gone up. So that very difficult to say. Yeah, we had to take decision based on we need to focus. But I can see the recently there's a big deal happened in the foreigners. They are in good. If there is an issue in motor sector, but since they are aggressively promoting their new cinema, new life, new cinema life, new property, probably they may catch up because that was their 1.5 years ago they completed, 2-3 years ago they completed, and it was underperforming. But now they start performing. That revenue is coming, right? Since they have high exposure in leisure, not only here from other side also in Maldives also. So if there's a drop here, it will catch up. Right? It will catch up. Maybe that's why they introduced this new one also, Sea Line 6, sorry, Sea Line 5, which is not 100% EV, right? Even that one also, PHEV one, probably they may go ahead with those vehicles to catch up. There's a those thing. I think this issue is with the fully hybrid one, like Kato 3. And there's some say will have an impact to Dolphin as well. And recently I saw this is not only BYD, all the electric vehicle have this issue. So capacity limitation by software. So we'll see, can go either way. But you can see this one, they are giving lot of information you to understand the future. Future about Jongli's next quarter, next 6 months. But not only this, I don't have much of a time to, otherwise I will go through. But when we are doing finances analysis, we can do. And mainly, so you can understand that the knowledge will help you to understand other companies also, because there are competing business. Okay. Any other questions? Okay, if no questions, we can move on. And so still we are only in this introduction part. And it is essential, and some of you at very young age, some 18, 17 also, few guys. So very essential that you start your journey in the prime age, right? When you are young, you have to start your journey. Good that some of you have started in a very young age, because then you have more recovery time. If something went wrong, you have more recovery time. Then if you start young, you have more time for investment. When you are young, you are more aggressive and you can take risky decision. Like in keeping, if the John case is coming back, if you think that decision will be in favor of John case, then you bought at lower price. So the after decision price will go up, right? That's a risk taking. If you are young, you have that risk taking ability, the time value of money. So if you started early, the early investment, early return is much higher value than late return. If you have a good investment foundation, you have a secured future, right? So if you have a good financial investment, so no need to borrow like our government. So you can lend, right? So then, since you have start your investment journey very early, so you have a good strong retirement period also, right? So if you planning for retirement, you have to start when you are in 20s rather than waiting for 40s. If you start 40, you have a very smaller period. But if you start 20, you have a more period to do that, right? Another thing, if your salaries, if some of you may be working people, work for some organization, if you are entrepreneur, no issue. If your salary is your only source of income, then you are one step away from poverty. Some quote I just want to share that I want to highlight that better you diversify your revenue. So if the salary is your only revenue, so you have big risk because you are solely relying on one revenue. So better you diversify. So investment is one area where it will give you additional income. So Warren Buffett is one of the key investor, one of the wealthiest investor. Most of people follow him. So he has said, on earning never depend on single income, right? Make investment to create secondary income. That's what I already covered. On his spending, he said, first you save, then you if you buy things you do not need to soon if you buy things you do not need, and you will have to sell the things you need. So he said, You buy only things you need. Saving, he said, first you save, then do the consumption. What we do the consumption. If there's anything left only, we use for saving and later convert to investment. Taking risk, never test the depth of the river with both feet. So if you are new to the market, so don't put your entire wealth to the stock market. Put small amount, understand how it works. Then you can increase. But you should not have entire your investment in stock market or other investment. You have to diversify. Do not put all eggs in one basket. If something happen, all eggs will be broken. You have to diversify. You need to diversify in stock, fixed income, properties, the saving account, some amount, then other areas like that. Okay. So golden rule in investing. So you need to do your own research. So I think today also I explained this economics just to help for your own research, right? Set clear goals. You have to have how much I want, what's the target investment I am looking at, what's kind of return I am planning. So set clear goal for you. Never invest in something you don't understand. So you invest things you understand. Right? If you don't understand, it's good that every one of you come here and follow this course because you want to learn. Right? So that's very key. Don't put your eggs in one bucket. We discussed the greater the potential return, the higher risk. So we already discussed long-term investment are not always accompanied by high return. You need to mindful. Review your portfolio and rebalance. Always you need to rebalance. Don't try to time the market. So in the market, so right now we are here. If you think that market will come down somewhere here, and you just sell your thing and exit. Unless you keep for long term. So if you try to see the peak, you can't. You were waiting to peak, so you were searching for peak, but you couldn't find the correct peak. So you are keep holding it, market come down, then you are losing. So if you see at this point, you say, okay, this is the peak, then you should exit. Then you are selling at higher. Then after that, it market crash. So when you are buying also, don't try to predict the bottom. If you say when you are here, okay, if you see the good time to buy, then you buy. If you wait here and then the market starts somewhere, you buy here. What happened? Most of the Sri Lankan, that they do, they sell somewhere here. They buy somewhere, they buy here and sell here. So then obviously they make losses. So personal finance planning also very important in this your investment journey. Financial well-being is whether you have enough money to meet your need. Not only your investment need, but your day-to-day need. You should have enough money. So you should be in control of your day-to-day expenses and your fundings, right? So that financial well-being you need to mindful. Because we call financial literacy in Sri Lanka, where we have very higher literacy, but in terms of financial literacy, we are low. So finance, one of the CSC objective of conducting this kind of seminar, even though they charge, one of the objective is to give you that financial literacy, right? So that is very important. So financial system, you need to understand when you are coming to invest, actually you are investing in financial system of the country, right? The financial system, the purposes are, it will help you to save more if you are on that part. The banks are there. You can borrow from banks. Then you can raise equity capital through stock market. You can manage your risk. You can buy shares. You can invest in FDs. You can buy in debentures like that. Then exchange asset for immediate and future deliveries. You can exchange your assets, buying and selling of shares. Trade on information. You trade on information. Like the John case says, also you trade on information. You got to know that there's some issue going on. So based on that information, that's a position you can take. If you believe that the John case is wrong, so then price will come down. Better to exit. If you think that no, they are not wrong, the custom decision will be in favor of them, then it's a good time to buy. Because when the decision comes, price will go up. So that's always you trade on the information. And then other one, before you start your journey, you should know your financial status, what you can do. So these are like some free expenses tracker. So where you can like based on your expenses and income, you can track. You can enter your income and expenses, and then you can see how you are earning, how it distributed. Right? If you see, okay, I have more. End of the month, you have a loss situation where your expenses are higher than income. When you deep research, you found that say, okay, my entertainment are higher. Right? Probably you can next month, then you can little reduce and see whether you can match the revenue like that. And like assets and liabilities for companies, you personally also you should have a liability, asset and liability. So like we call the balance sheet for you all, so that you have list down your assets. Your asset may be property, car, and the vehicle, right? The shares, fixed income, FD, those are your assets. Then your liability, so your asset may be 1,000. Your liabilities is that if the vehicle on lease, the lease, then your house is you can start using housing loan, you have a housing loan like that, or that when you reduce your liabilities, we call loans. So then your liabilities are 800. So then your net asset is 200. So that is what share market also, that is what we call book value, net asset. So for you, better to list down every month, you list down your balance sheet and see whether it's growing. Right, it is essential. So that's the balance sheet. This is your during the month how you distribute, how you have your financial position. This is not the asset and liabilities, which is your income and expense. This is your actual P&L. This is you can see your balance sheet. Those I have given only one, sir. There are enough many apps available. Certain subscribe based also. This one is a free one. So both available in App Store and Google Play. Okay. Another thing is you have to manage your credit card wisely. That's a good way to manage your financial cash flow. But you need to manage properly. And so, beginning of the investment journey, I would like to tell you, you have to right now probably you may work for money, but with the investment, it will help you to with the investment, the actually money will work for you. Instead of we work for money, when we have a successful investment journey, then money will work for us. When you are sleeping, your accounts will be credited with your investment proceed. Right? That's what you should aim for. Right now, any questions so far? Now we slowly moving into investment product. Any question? All good? Any suggestions? Okay, so we'll move on. Saving. I think I will not explain much. Saving, you know, right? Most of you have a saving account. The saving, most smart investors keep enough only enough money in the saving product. So you have to actually saving is not an investment. I mentioned in the very first day also. Saving is we are keeping some amount in order to use in order to face to unexpected or unforeseen expenses. In only the contingency amount, the contingency thing, right? Don't keep. I remember I said only 3 months of your earnings should be in the saving, which is your lifetime. So saving amount only to be using emergence, not as a investment. The saving you have online saving account, like normal saving account. Then you have money market account and the certificate of deposit, right? Or all if you go to website, all the banks you have, right? I'm sure you are familiar. I will not take you to the website of the banks since you are having saving account, right? So you can do normal saving account or fixed deposit for like 3 months, 6 months, 9 months, like that. But you have to watch for this say something. So this is about fixed deposit. You can see this AER. You need to look for this AER as the annualized earning, annualized rate, right? You can see the 1 month 6.5. So only 1 month, no. So you have to always compare with annual terms. So annual terms is because you can have a reinvestment of interest rate. So then like 6.7 is the annualized rate. You have to always compare with annualized rate. Otherwise, you will be in trouble. You can see there's another one called 200 days. We don't know what it is. You can see, but that one annualized 7.37. So that's you can check with 1 month. So 1 month 6.7, 200 days 7.37, which is good in terms of annualized because 1 month only 30 days, here 200 days. The days are different, but you can compare by considering AER. So AER is a key, and you can see now this is not the smart thing bank do. You can see 12 month they give you 7.25, but 13 month they give you 7.23. It's a low. Better to go for 12 month. 12-month AER is high, right? Now you can see here 60-month AER is they give you 11%, but the annual terms is 9.16 only. You need to compare. So 9.16 against 1 year 7.25. So then this one is okay, right? But you can see 48-month AER is 8.78, less than 60 month. Even yeah, in 24-month also not bad. 24-month you get 8.63, right? Against here, another double the period 8.78. So you can compare that with the other bank also. Now 60-month AER 9.16. You can compare that with say commercial bank rate. You have 60-month annual effective rate. You need to look for that. 60-month, their annual effective rate is 8.45. So commercial Sampath is better. 9.16, right? You will have to cut your expenses and build income. So then when you are building your thing, you need to manage your expenses properly and try to build up asset. Asset is the key. Assets are the one give you the fair value, right? So you invest under because of these economic issues, inflation, in everything, asset value can go up, say 130. So interest can catch up this fair value growth. Right? That's what you need to remember. So stages of retirement. So normally we can say like young adulthood, 31 to 35. I think most of you in that age. Then early midlife, 36 to 50, and late midlife. This is the journey of a person. And based on your current age, now if you are in 25, 30, your requirements are saving, higher education, migration, wedding, property, vehicle, those are your things. And if you are in 30, 35, then health, saving, property, and the insurance, right? All those things, maybe child education now. So here not a priority, but now child education. You want to send it to them abroad. So you need to start those things when they are in small, right? And then 30, 35. So by that time, you have already done the first property. Now you are looking at second property, like that. And then 45, 50, the health and retirement comes. right? These are your requirements. And you need to plan properly based on your requirement. Now, that's why asset class rebalancing is required based on when you get all asset class rebalancing you have to do, because you need to have these objective in life. So if you write now no assets, then you can, even saving is not an asset thing, but as a start you can have that and fixed deposit. That is the fixed income category. This is fixed income. And if you are already in this packet, you can then you can diversify. Saving fixed deposit, you need to keep it. Remember, like small amount, you need to keep it. Then unit trust, debentures, equity, property, vehicle, entrepreneurship. Those are the options. So we will cover unit saving FDs I explained. Unit trust we will cover debentures, equity, property to some extent, right? Vehicle and entrepreneurship I may not cover, but I will give you some feedback when we move on. So those are the things we are going to cover. So you need the asset class rebalancing means, so based on this is maybe your objective. I have this down. Maybe you may have a different objective to it, but I try to cover all the modern human requirement. And very important that you should start your retirement not here. You have to start retirement somewhere here. That's why when you start here, you have a more time. That is, you need to plan it. Because health is very critical at age, bypass, the kidney, the blood sugar issue, right? Diabetic, lot of things can come in this period, right? Now you can, maybe you are young, you may not have this one, but you can check with your parents and your grandparents, right? So things they have, you will have in when you reach to that time, unless you are really working hard on your health, right? Exercising and balanced diet and a lot of things. Okay. Hope that part is okay. Yeah. So far we have discussed about the approach, and I try to spend some time with you to give you that background information, which is very essential, right? Any questions so far? Any? Okay, no questions. So we move on under the learning outcome. So we try to cover different type of financial market and explain the securities traded in this capital market and capital market intermediaries and unit trust operations, and then brokering company. If you are not done the share trading and share investment, so we'll give you how you start open the accounts and start trading, and the stock, how you calculate stock market performance, like that. So what is financial system is actually the financial system include various financial intermediaries that help you to transfer assets. Like example, banks are intermediaries, right? The share market, stock market is intermediary. So they will help you to transfer from, if you are investing in from your fixed deposit money in the saving up in the share market, the bank, stock market, those guys will help you to transfer your asset and manage risk. And saving money in saving account is low risk, but money investment in share market is high risk. You take that investment decision, risk decision also. Right? The financial system is combination of all those things, include various financial intermediaries that help transfer financial asset, real asset, and financial risk from various form from one entity to another. That's a system. Your money in saving account, you decided to invest in share market. So then from your bank account, you transfer money in the for the share investment. So that's the system, the financial system which support you. Okay. So system, there are many players, like you have buyers and sellers, financial intermediary banks, the finance companies, insurance guys, stock market, everyone. Regulators you have for the share market, the Securities and Exchange Commission, and for the banks and finance companies, Central Bank of Sri Lanka. For the insurance companies, you have the Insurance Regulatory Commission, like that, and you have a government organization, financial institution, many people, right? This is combination of everyone will consist the financial system. So main function of the financial system, the achievement of the purpose of which people use the financial system. So financial system will help you to build up asset allocation, asset transfer, invest in based on your risk profile, right? So this will help you. So financial market, we can broadly divide it into money market and capital market, right? So we will discuss both financial market. Now you are now slowly coming into the financial market, right? You're already there with the banks, but now you are coming into the capital market also. So money market is where the market for short-term interest bearing, right? Money market investment are for short-term interest bearing investment. Short-term is less than 1 year. Less than 1 year investment. All the instrument in money market will be matured within 1 year, right? We have treasury bill, commercial papers, certificate of deposit. Those are money market instrument, right? Those will be matured within 1 year. So main issuers, those products are the government issues treasury bill, banks issue commercial papers, and private companies, right? Certificate to deposit. So normally this saving and FDs also come under this money market one, right? But I have not covered that because since you are aware, no, I already covered that. But mainly these are the money market instruments. Then the money market investors are banks, insurance companies, pension and provident fund, unit trust, and high net worth. Mainly this treasury bill and this commercial paper and certificate of deposit, mainly high net worth investors are doing that. Normal retail investors, they are mainly on saving and FDs. So they have not gone into this one. So these areas normally the high net worth investors. Right. Apart from that, we have interbank foreign exchange market also, where in a locally, example now, say Ceylon Petroleum Corporation, CPC. So they may be maintaining their account in Bank of Ceylon and the People's Bank, the government bank. So when they want to pay for the LC of the fuel shipment and dollars in the Bank of Ceylon may not help, not enough. So then Bank of Ceylon on behalf of CPC, they borrow from other bank. We call it is interbank foreign exchange. So they ask, they check, say they want 300 million USD to clear the shipment. So they have only 100. So they are some part commercial, HNB, everyone to give the balance 200. So that activity happening interbank foreign exchange market. Right.
So the Forex is where? Is it in the same or it's a different thing?
Forex is the same. Forex is the same thing. And now in terms of currency, you can keep in Sri Lanka. We have not liberalized much on this forex thing. The forex trading and all we can't do. And if you are an individual, you can keep a maximum $10,000 equivalent of currency and other foreign currency. And if you are export and you get money, you have to bring money through a bank account, right? Bank account, and those will remain in the bank account. And there was in the crisis period, we had this mandatory conversion. So the government didn't allow you to keep your dollars in USD denominated account. They request you to convert because then the money dollar come to the market where the government can use those dollars to import for medicine or food. But right now, I think it's okay. They have liberalized it. But as foreigners, as locals, Sri Lankan citizens, right? We can't invest in foreign share market or foreign assets, right? So we can't do it, not permitted. So we call even we are a we call open economy in 78, but we have not opened some area. So which is foreign exchange market is one of the market where we have not much open. So we have this, we call this capital account is closed. Where the individual, sometime back there was a budget proposal before the crisis, the Sri Lankan citizen up to $100,000 in lifetime, right? Lifetime they can invest in foreign assets, but right now that is not there. Where we can't invest. I think there are some promotion and all. Say we can invest in while in Sri Lanka, while we Sri Lankan citizen, we can invest in foreign exchange, foreign countries. No, foreign stock market. No, we can't do. If you are a non-resident Sri Lankan citizen but non-resident, example, you are in Dubai, where they have more liberalized market, and you can invest wherever you want based on that country's foreign exchange rules. If you are, if you are a citizen living in Australian citizen living in Melbourne or where, you can invest everywhere, right? But Sri Lanka, you can't do. But for the companies, you can do foreign investment subject to central bank approval. So they are monitoring that. Why that we have those controls? Mainly because the foreign exchange is very rare asset. You saw the reserve position, right? And there are many companies richer than Sri Lankan government, right? Even if you see, you have the Fortune 500 companies. I think out of that, top 400 companies is bigger than Sri Lanka, right? So in terms of results, and because we have only 6.5 billion reserve, which is very small in terms of in global terms, right? And yeah, the forex is very much regulated one. We can't easily transfer here and there, right? So that's why even they control lot this vehicle issue. This came on this, no, this they say like we have to have LC, and the cross border thing, another one. The cross border LC, the other problem. And I think I got to know. I think there are only in the world there are only 2 countries where they use LCs for vehicle import. We and other countries. But other countries, they used to have this telegraphic transfer, TT, right? If you buy from Japan, you send the TT to Japan. So funds goes today to transfer, tomorrow they will get it, right? Then the following day shipment can happen. So here is a big problem. If you personally import, you can see the trouble. You have to LC open, then they have to confirm that, and then they have to send it here. Then the vehicle should come here with the vehicle. The document should come, right? Now, then after that, your bank has to, when the vehicle reach here, only your bank will remit the money. Lot of issue, a lot of relaxation. Why is forex is not available, right? As I said in this example, since BOC wanted some dollar, and we have a dollar clearing function also in Sri Lanka. The central bank, time to time, they appoint bank, and then sometime back, Sampath was acting as a clearing bank. So everyone local dollar transaction, bank to bank one, go through the Sampath, right? So they do the local dollar function. If you are an exporter and getting dollar income, and then you can say if your bank account, you can invest in FD or whatever in Ceylon Bank. So then if you want to transfer to the your saving account in HNB in dollar account, you can transfer. Those transfers happening through this system, the interbank or in exchange system. But if you are a non-resident, residence means citizen is no problem. You can be resident, you can be citizen of Sri Lanka, but not a you can be citizen of Sri Lanka, but not a resident. Resident means to be a resident more than 182 days, you should be in Sri Lanka. Right now, in our case, we are Sri Lankan citizen, and like nearly 300 days we are in this country. So we are a resident. You are we are and we are a citizen and resident. But if someone in Dubai, you are in Sri Lankan citizen, but in terms of residency, more than 182 days, you are in Dubai. So then you go as a non-resident. If you are non-resident, you can't use your saving account to invest in Sri Lankan capital market. You have to open new account with the local bank, IIA, individual investment account, where the funds should come from them, even though you are citizen but non-resident. So you need to bring fresh money from Dubai or wherever and invest in share market. And if you want to sell and take back, you have to take back from the same account. Because the central bank wanted to check. So you brought money to the system and same thing you are taking back. But maybe you bought and the share prices has gone up, that is okay. You can take 100 and bring back 120. That's okay. But you can't use your local currency account to buy shares. You may be doing it, but that is wrong, right? Because you are a non-resident. Okay. So if you are non-resident, you have to, even foreigners also, same the foreign investor, they are non-resident and non-citizen. So they also should come through the country through this special account, IIA account. All these government securities and share market investment, everything will come from there, right? Otherwise, you can't take back money. So there's something foreign. Any questions on that area?
So there is a rule before Sri Lankan citizen can have 100,000 something in a
Correct.
bank account in
Yeah.
the US dollar. Is it US
Yeah.
dollar, whatever dollar? Is it?
You can take back also, but now it's not there.
Even you did not work in abroad, there is a rule. Is it?
Yeah.
Any Sri Lankan
No,
can?
no, that's for the citizens. That's for the residents. That's for the residents. They can do, even though you don't have dollar account, you can borrow and invest. That was there. But now that you can't invest. Residents can't invest. Sri Lankan residents, individual residents can't invest. But if you are working in somewhere, say you are in Dubai, then you are a citizen but non-resident. So then that your resident currency rule will apply. If Dubai allow you to invest everywhere, you can do that. So then local rules, Sri Lankan rules will not apply even though you are a citizen. Why? You are residing outside the country. Hope you got that.
Yes.
Yes.
Thank you. Yes.
Why they wanted to have? Because they because of this we don't have enough dollars, right? Because otherwise, if you are non-resident and living in citizen but living in Dubai, and if you use your local, you may have a rupee account, you invest there, and then you invest share market, and when you are taking back, you taking back the share investment and also other your money. If you have a land, you sell the land and send the proceed to the saving account, everything you are taking back. So that is not allowed. If you bring money from outside, the system will allow to take it back and your dividend. So that's why that part we have allowed, liberalized. That happened in 1980s. 1980s, the foreign investment we have liberalized, where any foreign investor or local investor who resident outside Sri Lanka, they can invest in share market and they can take back money when they want, and all the dividend, everything they can take back, provided that you brought through this IIA account. So they want to track. If you brought money, you can take out. So if you, without bringing money, you use your saving account and purchase shares, now you are want to take back. Then they check whether there was a inward remittance. If there is a no inward remittance, you can't have outward remittance. Right? If you brought money, they will allow to take back. So that's very, yeah.
Yeah, got it. Thanks.
In other countries, that's not the issue. Right? If you are in developed, that's why Australia, Dubai, or wherever. So these restrictions are not there. Right. So capital market is the other part. right? Capital market, mainly market for you are trading in assets for maturities more than 1 year. So more than 1 year. That's the key difference. Instruments are treasury bond, private debt securities, bond and debentures, and equities. These are the main product. Right? The purpose of this to facilitate raising a long-term fund. The treasury bond will allow government to raise long-term fund. Private debt securities, listed and unlisted, both will allow the companies to raise long-term fund. Equities to raise long-term fund for the companies. Right? So we will cover all these three. The main issuers are government issued treasury bond, the banks and other corporate issued corporate debentures, and private companies, private and public, everyone. Private companies can't issue. Private companies will become public companies and issue and list in the share market, right? So main investors are investor company, insurance, pension fund, unit trust, high net worth investors are now only retail investors has come. Retails are in this product. Mainly retails are in this equity. Right? Other two product mainly institutions and high net worth investor. These are bigger market. The Sri Lankan treasury bill bond market is few times bigger than stock market. Right? The bigger one. Okay, I hope that part is clear to all. If you have any questions, please ask. Otherwise, I will move on because I need to catch up. Still, we are on the first presentation. And the financial market, according to the instrument, we can cover. So previously, we cover based on the maturity, right? Less than 1 year and more than 1 year. Here, we can based on the instrument. So based on the instrument, type of instrument, we have two. Fixed income, that means where you get the fixed income. If you invest in treasury bill or treasury bond, you will get the fixed income, right? So your interest rate is fixed. So whatever happen, there you will get that interest. The equity market is not fixed income. If the market is doing well, you will get good return. And dividend. If the market is not doing well and the corporates are not doing well, then your share price might come down. You may incur capital losses, and further you will not receive dividend, right? So so can go both ways, go up and go down. But here fixed income you can stick to more on fixed in nature, right? So and this so debt market is also known as fixed income market. So debt market mainly two types: government securities market and private securities market. Right? So we'll see in the government securities market we have treasury bill and bond, and private debt market we have commercial paper, private bond, and debentures. So this is the central bank website. You can see, you can read in your free time. This is financial market of the Sri Lanka. Financial market overview, they give an interbank call money market. So interbank call money market means when one bank is short terms of liquidity, they can borrow from the other bank. So if the BOC is short on that particular day, they can borrow from commercial bank and sort it out their liquidity position. Right, then you have domestic foreign exchange market where we discuss. Then government securities market we are going to discuss. Corporate debt market and the equity market we are going to discuss. Right. Then the equity market. So equity market. Say example, if I have a land, if I have a beach front land, right? You can see the beach this side. I have a land. Now I wanted to say this one worth 20 million. Now I wanted, because of the booming in the tourism industry, so I want to capitalize that market. I wanted to have a small hotel there. Now the problem is I don't have fund. I don't have fund, right? So I have only land only. Even I have a concept, but I don't know. I don't have enough capital to do that. So probably one thing is I can talk to the bank and see. But bank come and see, okay, you don't have hotel managing experience, how you bring the people, a lot of issue because there's only bare land. And bank will do a lot of study and give you, right? Because of that, you thought to different approach, you can talk to your friends. You talk to some friends you were with you and then they have migrated doing well in other countries. So you talk to them. So you are your name A, B, C, D, E. There are now 5 guys. So you estimated like 6 or 10 rooms hotel, maybe cost somewhere around 80 million. 80 million to bring this. And the land cost is already, land value is 20. So you need 100 capital, right? So then, so you want everyone, all your friends to contribute this project. So your contribution in for this one, not cash. It is in the land. So land you are giving 20. That is your contribution, but your friends give you 20 each. So the 100 is coming, right? So then now your friends may ask, now we are giving money and the hotel is being constructed on your land. So end of the day, will you own it? The property also, since you own the land. So then they, even though they're friends, they have a doubt on that. For that, for the clarity and everything, then what we can do for their this 20 million investment, when they're bringing each one of them, we are issuing some certificate that show that you have contributed 20 million for this project. So that is what we call share capital, right? This is what we call capital. Initial amount you wanted for a particular project. This we call capital. Now, this one, the certificate you issue, we call share certificate, right? That reflect the value of the investment. Okay. And then say after 2 years, now you have done the thing and now you are doing well in this hotel. Now the investment has gone up to 120. So making investment like say 125, 25 each. Our investment has gone up 25 each. Now my friend B now wanted to exit. Right, he has a development plan now. Brought 20, now investment worth 25, want to exit. There is no way to exit unless his portion by our guys, or so we don't have money to buy. So there is a new friend come called F, and F will pay 25 and get this ownership. So then the B will issue the share certificate and B go out, F will be there. That's why we call share certificate is a transferable document. The ownership can be transferred. Whereas FD you can't transfer. Those are not transferable instruments. Okay. And then, but this is in the unlisted scenario. In the listed scenario, now before the F is there, right? Before the F is there, in this scenario, since we have done this thing, 100 now is 125 after having 2 years of a track record, we can come and list in the share market. If we come and list in the share market, right? Advantage is if the B won't, one thing is we can raise another fund. If you are coming, there's another adjoining land also. So we can, with this one, we can come to the, say we need another 30 million. We can come to the market and ask public to invest on balance 30. Since we have a success story, so one option. The other option is we don't have this adjoining thing also. We don't have the adjoining thing also. We want to come and list. And if that scenario happen, now this adjoining thing is the primary market we call, right? The people can raise money in the primary market. The first time you are company seeking, right? This is called primary market. The secondary market is where the existing investor like B want to exit, right? So B want to exit. Now no need to find investors, right? So you can sell through the market. So B can want to exit, so B can sell. So B share can be buy by F, G, H. Many people can buy that his portion. So freely asset can be done. That is happening in the secondary market. No need to search. When you put the sell order, it will be, if the amount is agreeable by other investors, so they will buy. Right, the secondary market. Primary market is where like stock market is where the ownership. You remember that example, the friends when they bring money, I issue share certificate to them. So that show the ownership, and the ownership we can give like we call ordinary shares, common shares, where you have own, you just reflect the ownership, and you can participate, you have voting right, you can vote for decision like that. Then you have a preferred shareholders, right? Preferred shareholders. So that is also share capital, but normally you don't have voting right. And the warrant also is another instrument. It was sometime back, it was trading here also, but right now not. Warrant also you can purchase, and subsequently future day it will be converted to ordinary share, right? So these shares reflect the ownership. And the equity market, the two type, primary and secondary. Primary market is where the company first time raising capital. They come and invite you to invest. So normally, sometimes they raise fund, sometimes they not raise, if they just introduce. So they just existing company, they just list. Sometimes, majority of time, they can come and raise capital. We call IPO, right? Initial public offer. So they come. Probably the main shareholder is selling, and they exit. They 100% own. They may sell 10% to the public, and sometimes they may not sell. They will come as it is, and the company wanted new fund for the new project, like that. And sometimes they come and this as it is, no new fund. So those are we will discuss much later across area. And the primary market is where the new issuer, the first time company is buying equity and debt, where in this case, you can buy from the primary market as well. In the IPO, you can buy. So that means in the primary market, you are directly buying from the company itself. In only IPO, right? So in the CSC side, when the new issues come, you can say new listing here. Initial issue. So right now we have no equity one. There's a debt fund is there. Debenture issue is there. The high yield debenture is there, right? No equity new issue right now. So this one is open for subscription, right? And in the secondary market is where now in the primary market, say you company issue UA, buy from the company, primary market. So secondary market where you are a B, now IPO is over, company came and list, you buy from A. So this is the secondary market. You buy from another investor. That is called secondary market. If you are directly buying from company, called primary market. So investors who subscribe for primary market and the owners already, promoters who already had company shares at the time of primary issue, so they can sell in the secondary market. I think some issue happened, right? You can hear me, right?
Yes, sir, we can hear you.
Yeah, wait. right? The secondary market where you are buying from another investor. So that's the difference, right? So the Warren Buffett I already discussed. So they say you need to understand when the primary market come or in the secondary market where you first time buy, you have to understand the business, right? You need to read and understand. So then you can take decision when the price will go up, when the price will come down. You can link because now you know interest rate and stock market relationship, interest rate and inflation relationship, exchange rate relationship. So when those things changing positions, you can link what will happen to the share market if you understand the business, right? So these are some movies where you can learn about stock market. So this one, Wolf was fairly old one, right? But you can see all those are based on most of the real stock market cases, right? And world stock market, if you see, the United States is the leading one around in terms of globally around 55%. Then Japan, United Kingdom, UK, these countries. Okay. In the stock market publications, you can CSC daily report are there, the brokers daily they publish in social media, right? Those things are available in the Sri Lankan. In the CSC daily report, you can go to CSC and where you can see publication in the market publication CST daily. So this is the daily report on last Friday. So this give you about previous day and today scenario, index situation, and the turnover detail, and the top gainers, top losers, and details on right issue. We will discuss those things later. I don't worry. So I will cover those things one by one, and the rest of our programs. Today is our second day, no? So we will be meeting another 6 days. Right issue, the script dividend, subdivision, all those areas we cover, right? And about you have given links is given, and here you can see how the daily operation start. Now, example, you can see 8 dispense hotel loading. This is actually summary of transaction. 1,290 trade. There were 12 trade consisting of 1,290 shares at 106. Then after that, you can see price is little come down, right? But totally for the day, price has reduced by 1 rupee. Like that, price difference is mentioned for all the shares. You can see how the Baira Farms started with 235. End of the day, 244 has gone up, right? Price has gone up. All the share summary is given. It's a big report. So those are main board, bigger companies, right? And the other one is, I will cover that one, or the reserve board also I will cover. So watch lists are the ones, so the CSC has alerted you there are some financial and non-financial issues, right? So that you have to check. So that one trading also allowed, but you can see differently. And here the crossing, those are negotiated trade. So that's not the market value. So the buyer and seller prior to the trade, they have negotiated. So the price they have agreed. So you can see Chevrolet and lubricant, the Caltex mainly negotiated trade happened. The big trade actually happened. And then again Chevrolet and a lot of lubricant, actually a lot of shares has got, right? Crossing.
So what is the crossing mean? I heard of.
So crossing is if you have a bigger parcel, you can say bigger, 1 million shares, right? So now when you put it to the market, you don't know when you put the big amount, price can come down because more supply. So price can, you can see everything went up to this 170, right? So then 170, so you talk to your broker, say I have 1 million, so I would like to sell to the one party, right? So otherwise, if you put the entire parcel, but you can see when there's a more shares, it will be purchased by many retail investors. So then price might drop because someone get 100 shares, 200 shares, like that, many price fluctuations. So if you were to have a straight transaction, you have a you talk to your broker, and your broker will price a buyer to you, and you pre-agree the rate. And to the price, there are some percentages, how much that can deviate from the market price. There are some rules. So based on that, within the rules, so you can either higher or lower value compared to the market value can do. So the trade is agreed before the market. And so then this is trading through separate board or crossing board, where now you are selling, say your buyer is say A. So you are selling A is buying. It's not visible to others. Others can't see.
So
But
does that
so
mean,
Will not come to the order books, and
Yeah.
minimum amount is 20 million.
Yeah,
so this
correct.
price will not be reflected in the price that is seen on the stock exchange?
Yeah, the market value slightly can differ. Yes.
Okay, that this will not influence the market value.
No, the when the trade happening, the other retail investors, other guys, they also check. They also seeing what the this one. Then based on that, the price will go up. The rate.
But the trade is only informed after the fact. No, it's not live. You don't
Yeah,
know,
yeah. Not live. Yes,
right?
not live.
then it won't happen an inside trading by the time, or how?
No, they end of the day they announce it. If there's a bigger that if the 10% of holding like that, there are threshold. If you meet that threshold, then after the trading they announce. For example, now recently this Tamika Pereira came into buy LAF Holding. So LAF Holding is the unlisted entity, so which is not in the share market, but LAF Gas and LAF Power are the one in the which are subsidiaries of LAF Holding and in the share market. But since they have agreed the last holding actual share crossing happen, sale happen, but they announce, right? They announce. So those things just trigger, like if you buy more than 10% only, you need to announce it. And then if you buy more than 30%, then the takeovers and mergers code will activate when you need to give the offer to buy the rest of the thing. If you buy more than 30%, you have to give a offer to buy entire 100%. Sometimes other buyers may not sell it you to buy, but if you buy 30%, mandatory offer. To trigger mandatory offer, you need to give the offer to the other holders, to other shareholders, to you can invite. Others may sell or may not, but you need to offer when the 30% reach. But more than 10% only you need to inform.
30% you can offer, or you can without offer also you can stay silence, is it? Or it must offer?
No, like if you buy more than 10% through the crossing or whatever, you need to immediately inform to the market we have purchased this. If it is go to 30%, then you have to offer the mandatory offer. So that mandatory price may be different to the market price. Probably they do the valuation and all. So they say this is the price I am offering to you. Yeah. And then the other investor, because now you have only 30%, there are 17 outside. They might come, may not come. Because you to get control, you need more than 50%. 51%, 50.1, something you need to get the control. So guy who want 30% wanted to get more than 50. So then only you get the control of the company.
Same incident happens East West property.
Yes, yes. So Dhammika Pereira's all, no, he bought from original purchasers and then he got the control. I think he got more than 50. Yeah.
70%, I think.
70, okay. So because you need to majority, like it's a parliament thing, so you need to have majority vote. So to have a majority vote, you need more than 50.1%, like that. In this one, last thing is unlisted one. So Dhammika Pereira, he didn't buy anything in the LAF gas or LAF power, but the owner, the owners of the LAF, if you see the LAF,
So it's the what Dhammika Pereira has bought. It is not in the listed company. That's a
yeah, it's outside. So if you see the LAF gas is a listed entity, but prices went up. Because of this news, these prices went up. Because a lot of now he is the business icon and he can add a lot of synergies. No, the LAF prices went up heavily on this. You can see.
So it's like a basic. There's an agreement within them. That's why maybe they.
Yes, yes,
Is it?
yeah,
Okay.
yeah.
It's not that he bought it or something like that. Not
No,
that.
no, no. The pound in the LAF holding the Vagapiti and there was another one, Mr. Silva, the co-chairman. Then the actually co-chairman, he want to exit. So then he had only 40%. So he has only 40, and the other guys have 60. So then, Dhammika Pereira buying 40% of LAF holding, he can't do anything because majority with the people owners, Vagapiti. So then they would have done the discussion and agreed 50-50. So that like a joint control, 50-50 ownership. Right.
It's
Now,
yeah. Sorry.
yeah.
So basically, Vegapiti also need Dhammika Pereira to come and play role. Is it what?
Correct, because this company need some restructuring, some funding, because this LAF business, LAF gas is a price control business. Right now, energy pricing happening now. So one of the issue of Sri Lanka was we were not adjusting energy prices in the past. We thought if you adjust when the world market gas and petrol prices go up, we are not adjusting here. So then we are actually, the government is subsidized. All of us, including myself, we benefited. The world prices is higher, we are paying lower prices. And then who should take this the discount? The government, the TPC or the Litro has to acquire. So then there's a difference, funding difference, because your selling price is less than cost. Then what happened? There's a cash flow issue, they borrow. And for borrowing, they need to pay a lot of interest. And so then the company is making losses. And the LAF gas also, even though they are private entity, there is a control price. So gas prices are controlled by the government. Even though they are private entity, they can't sell the way they want, right? Because of that, so the market prices are not adjusted, they are suffering. They are not government, no, they can't, so shareholders has to acquire. So that's company need a huge capital boost to recover. You can see with the decision, see the price from 32, September 2nd, 32, now 63, the double, almost double. You can see there's no insider information. If there's insider information, you can see prices would have come like this. There's not much, right? Now this one,
Yeah, man.
so you can see their owners. So owners Laugh Holding, Laugh Gas owned by 74% by the Laugh Holding Limited. So the Amiga Pereira bought 50% of this Laugh, that is unlisted entity, not a PLC. But because of his arrival to shareholding of this, that's the parent entity of Laugh Gas. So that's why, because investors think that he will revive the company. So that's why the prices went up, right? Even EPF also holding around 17%. So good for them also. The price has gone up, right? And then you can see the problem they have. The main problem is finance cost. You can see operating profit 525, finance cost is 733. So interest expenses is more than gross profit, operating profit. Even that right now low rate, right? Even the period you can see is 100 million is the profit. Finance cost is 2.4 billion. So that's why you have 2.5 billion loss. So when you have a loss, your asset, net asset go down. Right? You can see the net asset here. Out of net asset, 5.4 billion is the loss. Because of that, your equity is 2.4, 2.7.
That means a huge loan is there.
Huge loan. You can see here. So that's why you are following a cost of financial statement analysis and other things you will do later. You can see loan. Interest, the shortfall. Then the market prices are not adjusted. No, the government is a problem, right? So they didn't adjust. So then you have, when the shipment come, you need to clear. Otherwise, you can't in this business. Laugh was having the license to operate. It's a good license to have it, right? But so your cost is higher than the selling price. Obviously, it's a simple max. Right? You can see interest bearing loan 12 billion. And then you have refundable deposit means that when you are buying that gas, you need to give some refund, right? Maybe dealers deposit. And other payable 8. Short-term borrowing 20. So altogether you have loan itself 32 billion. Whereas the holders are more powerful. Equity is 2.7 trillion. Yeah, 2.7 trillion. A loan is, billion, 2.7 billion. Whereas interest bearing loan 32 billion. So barely is a highly geared. The banks are taking positions. So you need to revive this company. Now I think the Litro and both are doing market pricing. I think the prices are a little higher than Litro. And but some synergies can come. The Amica Pereira, he need to put his business wisdom and revive the company. But they have Laugh Group, a lot of synergies. You have supermarket, you have petrol side, right? And this what is this eco free something, right? This emission testing thing they have now. So there's some synergies can come now. Now the Amica Pereira, their business, they have Singer. So Singer has island-wide outlet. Now probably you can sell Laugh Gas there. So no need to have other retailer segment. You every single outlet you can sell. Then operation cost you can cut down, right? And then the eco-free thing, no need to separate one. You can have in Singer itself, like a lot of things. So a lot of synergies, and you need to bring down this cost. So some revival plan will be there. And Amica Pereira also will get access. He doesn't have supermarket now. He will be in that supermarket business, and petroleum is the key, right? All the bigger investors in world, so they should have petroleum product in their portfolio. So he was like, so maybe he is in power. They have few power companies, but not in the petroleum. So probably they may enter, because the good, you can see equity, very small equity because of the high debt. So the price would have been much cheaper in the group company, and all bigger in like India, the Reliance, Mukesh Ambani, so all they have petroleum things, right, under their business, probably. Yeah. So those are now the closing happened recently with this Myland. So Myland, they had that Myland development, right? So they had that closing. You can see. So that company they sold. You can see the announcement, right? So then, so they sell the control to another party. I think ambient capital they took it. So those are the predetermined things. So pre-agreed deal. Does the shareholders vote at the AGM get weighted by the number of? Yes, yes. That's why you always wanted to get more control. So it's like a normal parliamentary vote system. You to be in control of the business, you should have more than 50.1% capital votes. Each share equivalent to one vote. So that's why they wanted to have. But this last scenario, they have agreed 50-50. 50-50 scenario because both are business entrepreneurs, so they want to have their power also. Right? So, but 50-50. So maybe whether PT doesn't want to give up his company also, right?
But later, the Amiga can buy more.
Correct. So we don't know those plans. He might, maybe we don't, because the private entity information is not available to the public. Probably, so they might revive the business. Then the asset value will go up. A lot of things can happen.
It's a purely the restructuring the business. They basically because they are making loss. That's why maybe this one is it as per you, right?
Yeah. So first you need to revive. Yeah. So that you need to restructure it. That restructuring. So we were discussing on crossing. Yeah. So some crossing happened on that day. But this added to the turnover. That's why sometimes you see when the market start within 5 to 10 minutes, big turnover. Definitely there was a crossing, right? But then,
yeah. Sorry,
yeah.
sir. Sorry.
Okay. Now when there was a thing, you can see in the here down, you can see the volume, share volume. You can see where if there was any transaction. So then if there's a bounce, we can see here. You can see when the exactly when there's a trade happen, even though it's not visible, but you can see the now several lubricant. Yeah, you can see the volume, 6.3 million volume. So those volume you can see, right? Then you can see some big trade happen because you can reflect the turnover is high. Then the total turnover you can see here, whatever the number of trade into 170, what kind of price. So then you can see how much at that point, say 945, market turnover is 5 billion or something. This trade value is 4.5 billion. So then you can see some closing happen like that. So then other investors get activated to other shareholders, the small shareholders also. Then the share price might increase or decrease based on the situation.
So this report actually is crossing now as a retail investor. We are so how we can get the benefit? Is there any way we can get that benefit?
Oh, because now while you are holding it, like no laugh case, like actually it has not gone from here, but so those now for example Javelin one, so maybe some some party is collecting. So we don't know. But because if they are buying means the good activity is improving, the activity improvement will help you to price increase because you can be benefited from the market activity. So that's the good thing can happen. You will be benefited from other transaction. You are a small shareholder, right? You can see Chaval and see LLUB. But that day, now price was in the decrease in trend. Decrease in trend because that now there have been someone is existing from the company. So you need to follow this one. So someone is existing, but now new party can come, right? Lot of things. So you will be benefited if the price go up, but you will be not benefited if the price come down, right? You can see price has come down that day. But sometime when the bigger trade happen, price also because come down because this is a negotiated trade, no? They would have negotiated less than the market price. So you should not be panic because if they wanted to buy from the market, then there's no point to negotiate. No? So if the market value is 180, you can buy from the market and collect it, right? So negotiated means for the bigger parcel, the wholesale thing, no, not the retail thing, the wholesale deal. So then the both parties negotiated. Obviously, the buyer is negotiating less than the market price. Otherwise, no point. So then so that's why that particular day it came down. The trade happened less than the market. But sometime following day it can go up because that scenario not no longer there. And some with the if the controlling holding is changing, then it obviously go up with the higher price. Like this, even though the 6 million trade happened, there's no change in the controlling. If there's a controlling thing happen because new party will get the controlling power, right? New party will get the controlling power. If that happen, you being the small shareholder, you will be benefited. Now, that's one you can see the east-west scenario. So east-west scenario,
He might be doing this one for a period of time, maybe 1 week or 2 weeks. Maybe.
yeah. You can see the east-west scenario, they first sold some land and got huge 2 billion or something profit. And then they sold to the Dhammika Perera. So then the trade, with that trade, it's like trade happened at you can see over the after this deal price went up, then you will be benefited. Price has gone up. Now this trade happened on right? You can see this is over 10%. They have announced it, right? East West trading. So this is the deal they went, right? They have sold at 30.20. 30.20, right? 30.20. And so then the mandatory. So then the Dhammika Perera got more than 30. So he has to offer this takeover and mandatory thing. So he is giving mandatory offer they have given. So they are buying, details are given, right? And then, but now you can see price 60. So he has bought 30, now 60. So if you are a shareholder, you will be benefited. You will be benefited with this deal because you can see price has doubled. The other one also Myland. Myland development. So that also they sold it recently. So they sold it to 10%, over 10%. They need to announce. So they sold at around 850. 850. This is September 9th that happened. 850. Now you can see now 1880. After this one, price has gone up. So then you will be benefited. So that's something you were holding it, but some bigger players are dealing. So you being small shareholder, you will be benefited. You will be benefited. Right? I will look forward in cases where it has come down also. Right? Market can go both ways. But both recent experience is that you can see prices has double, more than double. Being a small shareholder, so if you have positioned yourself in this investment, so when they are trading the controlling stake, you will be benefited. Okay.
But sir, these prices are more than the net book value, sir. This is overvalued, these all prices.
No, you can't see because you can't see like that because the book value happened with the previous owners, no? When the new owners or the new owners were like, who are the new owners? So Ambient Capital. So they like new partners came. So when the new owners come, so they will revive because of the previous management say they couldn't increase the value. That can happen, right? The new owners come, they have a lot of synergies and a lot of expertise on running this business like that, and they can revive the business. So then uh, you have to now forecast the book value, profit, and everything because with the new management, so management skill, and management, two different management. So as per the previous management, it's like book value is that, but the new management can bring different expertise, which will enhance the future profit. That's why it's going up. So obviously it's going up. That's why you laugh, everything go up. So new synergy come. And some time back, when this Alliance Insurance, when they acquire general insurance from Janasakti Insurance, the market price was 15 times more than the book value. So that can happen. The new management can bring new things. So obviously prices, the share price reflect the future. The future they can add value. Yeah. The book value is only the indication. So we can't exactly say uh, low, high or low. It's only the indication, but new management can do the wonders. Yeah. So before we solve any questions, okay, so then we'll start discussion next week where we stop today, and probably we can discuss government securities investment and exit of next Friday, next Sunday. Okay, any question before we stop? Okay, so then thank you and good evening. We'll meet next Sunday. Okay.
Thank you.
Thank you, sir.
Thank you, sir.